All right, we're back and we are live. Let's see, it is currently 10:58 a.m. It's Thursday, March 5th, and today I got cooked. I got cooked. I got cooked. I got cooked. Honestly, I didn't want to make the video, but I'm gotta be honest with myself, and then again, at the same time, I can also look back at this and review it a little bit. Get some context to myself, and you know, I I got cooked. So, okay, let's see what happens. So just to quickly mark this out. At open, I was looking to be pretty bullish, right? Um, Obviously, we have this SMT, high time frame SMT at the lows, right? So the S&P takes out this low down here, Nasdaq doesn't, right? And from there, we obviously have a trending line higher, right? We have this low, high, higher low, higher high. We're obviously trending higher, disrespecting bearish gaps, respecting bullish gaps, right? So at open, I'm looking to take longs, pretty obviously, right? Cool. In regards to draws on the higher draws above us, we obviously have this very obvious buy to liquidity up here. Maybe consider this swing high as well. But more than anything, I was looking at these Asia session these session liquidity above us here to take out. Correct? Cool. So just for a little context, I was hoping that at open we would manipulate down before expanding up. So what we do, instead of manipulating down to the unmitigated 4 and the 1 hour intermittent low down here, we just shoot up. Correct? So let me just actually replay this real quick. So we got the replay. Let's go to market open. Right here, cool. Once again, I'm looking at open. I'm looking for us to ideally push it to on the unmitigated 4 and then expand upwards into our draws up here. Correct? But instead of that, what do we do? We begin to expand, right? So what I like to do is that usually I like to see us manipulate down, and then I always wait for a 5 minute confirmation. I'll wait for either a CISD, I wait for an IFEG, or I wait for a BOS to form, right? That gives me confirmation that we are supporting the FEG or the pullback move, and then we're ready to begin to push back up, right? So here because we manipulate up, I'm looking for us to manipulate down to then begin to manipulate up, correct? So that we let this happen, right? This pullback is basically the manipulation like I look for. So instead of us manipulating down into the unmitigated 4, we expand up higher and then we begin to manipulate down, right? So at this point, I'm looking for us for the 5 minutes to confirm something to me. I'm looking for us once again a CISD, an IFEG, or a BOS, right? So far there's nothing in play, right? We don't get anything just yet, and boom, we do end up getting this CISD and this BOS up here, right? Right, we got a CISD and BOS. So to me, this confirms. Look, we're ready to take up, keep on longing towards our higher time frame draws. Correct. Cool. So from here, right, I zoom in on the 1 minute, right, and I look for an internal model to form. So far, I don't see anything in play. I don't see anything that I'm interested in. I'm only really looking. Maybe I'll see us manipulate into the zone, but we don't get anything, right? Let it play out. Let it play out. We don't get anything, but eventually we do tap into London highs. Correct. So at this point, London highs has been tapped into. Yes, London has been tapped into, and I'm still confident in that our draw is still higher. As we can see, obviously the S&P doesn't take out the London highs, nor does it take any of these highs out here. So I'm still pretty confident in the fact that we're looking for longs. Correct? Cool. So I'm looking for a pullback into some sort of zone, right? The first thing I see that interests me would be this 5 minute gap that we form right here. Let's move. We form a 5 minute gap here on Nasdaq. Yep. We formed this 5 minute gap right here. Okay, let me actually replay this back a little bit. So the first thing that interests me to look for a potential entry here is this 5 minute gap. Yes. So we tap into the 5 minute gap, right? I'm hoping that we reject away from the zone and then we continue to aim for Asia highs, correct? So we tap into the 5 minute gap, newly formed 5 minute gap. There's no other draws below us here, and I'm kind of doubting the fact that we're gonna be retracing all the way down into this 15 minute gap down here, correct? So this 5 minute gap forms, and so we retrace it to the zone. I also do mark out equilibrium and the Fibonacci of the range. But once again, my first idea is this 5 minute gap, correct? Observe the 5 minutes. I'm looking to reject from this 5 minutes / 1 minute gap, right? So we have this going on. We observe, see what happens. We tap into consequent encroachment of this 5 minute gap, and we get a very nice strong rejection candle here, right? We also do have this 30-second right here. We get this 30-second FEG here, and it gets inversed. This is where my first entry comes in. Okay, so let me actually mark this out real quick. So let's go back a little bit. So I take my first entry right here, right? By the way, this is a market order entry I take, but I take an entry here at the low, and I'm targeting just up here for a little quick 1 to 1.5 RR. I don't really want to see us go all the way. I mean, I do want to see us go all the way up here, but honestly, I'm okay with just a 1.1 to 1.5 RR, right? So here I take a market order entry. I believe it is about 11 contracts I go with. I take a buy entry here after the inversion. So two things that were a little, well, I like two things about this. 5 minute gets tapped into, which is a good liquidity pool, and we just tap into consequent encroachment of that move, right? So we wick into it, we reject by that lower, and then we tap into consequent encroachment, and then we get a nice spike away from the zone. I like to see that, correct? And so at this point, we get the inversion, and so I take my entry here. Yes, but let this run. Let me go with 5-second increments. Right, let this run. We get stopped out crazy. Okay. Two things that I could argue that maybe weren't the best thing is that maybe we were trying to aim a little lower since we took out liquidity, so maybe we could have been aiming for equilibrium perhaps, or maybe even 0.6 to 0.7 of the Fibonacci range. And so maybe you could argue that I was a little eager here in this case. I did like the rejection candle here, which is what gave the displacement candle we got here kind of, gave me that kind of confidence. But I guess what I maybe should have looked for is for maybe a little bit of a more solid um inversion, because this was basically like 1 or 2 ticks away from not inverting. So maybe I should have waited for a little bit better of a confirmation of that entry, and yeah, we don't end up getting that. All right, let me just close. I don't really care about that. Right. So I take my first loss. I lose about $500. Yeah, about $500 my first trade. Right. Once again, I am still looking for longs here. My bias is bullish, and I believe you want to trace up to Asia highs. Correct. So then I observe the market a little bit more. What I want to see us pull into at this point. We just kind of play around with the 5 minute. Right. If we want to trace a little bit lower, I am looking for us to trace into equilibrium at the very least. Right. Another thing I see around equilibrium is that we have this 30-second gap right here. Nice little 30-second FEG right here, right around equilibrium, holding all this bullish pressure, right? We tap into it and begin to reject away from it, and then boom, right? Which is sitting right around equilibrium, which is a great confluence as well, correct? So at this point, I'm waiting, right? I'm still waiting. At this point, I'm pretty sure we inverse the 5 minute. Oh, actually, not yet. Still being respected, technically speaking. I think it actually holds. Yeah, it does. And so, let me actually go back. What the hell happened here? Right. So basically, I wait around, and we eventually tap into this 30-second gap. I like this 30-second gap because of all the bullish pressure it's holding. Yes. And I also see us form this 1 minute gap right here. Right. So let's discard this 5 minute, right? We tracing this 30-second gap, right? That I do enjoy like seeing this hold. Right? We trace it to this 30-second gap, and I'm still looking for an internal model to form, right? So I'm ideally waiting for this 1 minute right here to form and get inversed, right? So we wait, we fail to inverse here on this leg, we trace back down a little lower, right? We don't wick out anything, right? Eventually though, we get this nice expansion here, correct? We expand up very nicely, and this is where we break it, right? So this is where I went wrong. Two things, right? So I don't think the entry was bad, but I don't think it was A plus either. I think it might have been like a B plus maybe, because this does sit around equilibrium. But ideally, I think what I would have wanted to see is probably equilibrium and a 30-second get tapped into to then reject off of that zone. Granted, it was still a nice zone to trace away from, and we got a nice expansion leg from that zone too, right? And I was still confident in the fact that we would draw into this higher drop here, right? Honestly, I wouldn't have been mad if we took a loss, but what upset me is my execution. So what I ended up doing, right? So what I did is basically this. I took this thing right here, right? And I aimed for this entry right here, like this. Ultimately, I was targeting Asia high, so I did end up bringing it all the way up here, correct? This would have been my break-even point on both scenarios, right? So when I calculated this to create my limit order, basically I just did this and I went to market. But because market fluctuates, technically this right here would have been fine for the limit order entry, but the market was way more. So what ended up happening is that I ended up entering basically up here. Once this closed, I entered up here, but instead of entering at 500, which would have been entering down here, I ended up entering at around $800, $900 risk, which was dumb, right? It was dumb, and I shouldn't have done that. What ended up happening here is that I took an entry here, right? After this 1 minute inversion. Like I said, I don't think the setup in and of itself was a bad setup, particularly speaking. Could have been better, yes, but I don't think it was bad off bat. I kind of also did like how the 5 minute was technically still being respected here, right? Inversion would have occurred at this little leg right here, which we never did, and instead we traced that down and expanded up. So the entry in itself wasn't bad, but two things were off already, right? One, the fact that I'm not sure of whether I should be taking secondary entries or not, or should I stick to one entry per day and call it a day? And two, also this entry here was just bad as a whole, right? I didn't notice the fact that it was a bad entry until way later on, right? So okay, so at this point, I'm gonna let this run. Once again, 1 minute gets inverse. I take my entry right here. Bad entry, I'll say that, Matt. So I'll take my buy orders here. I went with a contract, which is way, way, way more than it should have been. Look at this. So my stop loss was down here as it would have been normally, which was 652. I think I did go with a little bit more risk, if I'm not mistaken. But also, I didn't even compensate for slippage either. And take profit would have been all the way up here, right? So I took a market order entry here, and I let this run. We begin to deliver higher, right? So at first, it's not bad, right? My break even was this very obvious break even point swing high up here. So I didn't really care too much about what was going on. What we end up doing though, we end up wicking crazy here, right? So we get stopped out crazy. So not only do I lose like 700 bucks off my trade, but the slippage there was insane. So that's why I ended up losing a whole lot extra there, and I got cooked up. Um, Once again, I do think we were still bearish, but there was a lot of things that were just off, and so in that today and today I ended up losing 1.4k, a little bit more than that, actually closer to 1.5. But yeah, today was a bad day. I basically ended up losing all my earnings. I was actually so I haven't actually traded for a while. I have been trading for a bit, but the last couple of days have just been break even trades basically, straight break even. Since Monday, I have not really taken. I have been taking two break even days. I could have made profit, but honestly, because of the fact that I don't have like a super like built up model and setup, it's kind of a little hard here. And in this case, I just took a really bad entry with a really bad RR and a really bad risk in this case. So I ended up losing about 1.5, clearing all my earnings that I had in any given case, and I'm about 1.5 in drawdown right now. So I only have about 2.5 left to risk. Um yeah, right now I'm sitting at around 99.3. I can draw down all the way to 96.8. So yeah, I'm looking at like 2.5-ish, give or take. Honestly, it hurts. It's not very pleasant. We ended up drawing way, way, way lower. I'm okay with being wrong in my bias. I have no problem with that. I just don't like making dumb mistakes. And in this case, which was a really dumb mistake. And honestly, I think the trades weren't maybe A plus. I'll say that. So maybe I could have done a little bit better in that area. But risk management was one thing that should be like spot on, and it shouldn't be dwindling around. and my break evens and like just areas, these certain things that I should have in a model and a setup already figured out, which I do not have fully. So these things are within my control. If my bias is wrong, it is what it is. It's part of the trading thing. But I gotta do a lot of back testing, a lot of more figuring things out here. So I'm probably gonna back test the rest of the day today, hopefully to maybe not go red tomorrow ideally, or maybe not even take a trade tomorrow. I don't know. I'll see how that goes. But yeah, today was just honestly bad. It was honestly a big L. Like I said, it does hurt, but I mean, it's just kind of what comes along with learning. Um, but yeah, um, 2 trades, 2 losses. What should have been maybe like around 1K ended up being like 1.5. But yeah, we'll see what happens down the line. Hopefully I can fix this, find a model, find a setup, find something to work better with. But yeah, that is for today. Tomorrow it's Friday. We do have a lot of news coming out tomorrow. So hopefully we get take a better trades tomorrow and see what happens. Onwards. Yeah. So with that being said, that's it. Losers.